Hey guys, this is Simon with Trade Inform Coaching doing the trade review for Tuesday, the 19th of May. And for majority of the day, it was a pretty actually boring, humdrum day. A day where probably the less you did, the better results you had. So let's kind of go through the basics first. You'll see that I have a 3-minute chart up today. The reason for that is, oh wow, it's extremely slow. So easier to point out the rotation size. So you'll see this morning we opened up near 21.26 and 3/4, rotated down to 21.23. Now, in most markets, that would be considered an insufficient rotation to take a long. In this particular in this particular trade, in this particular trade, and in this particular day, it was sufficient for aggressive traders in the room, simply because we're just not getting that big a rotation. Now, I have not been trading in the first half hour of the day. What's the reason for that? Well, we've gone from this environment where we have been having these wild open drives higher and open drives lower to almost complete submission where nothing's going on, right? 3 and 4 point rotations. So one of the objectives that we set today is that we would watch the first half hour and we'd be able to get a really good gauge off the first half hour as to what rotation size we would be looking for. So you can see here the range was essentially 21.28 down to 21.22, 6 points, and then we knew a derivative of that, 50 to 60% of that would provide, for the most part, for most of the day, good entry location. The other thing that we were striving to do is, aside from entries in the zone, is I have my own internal indicators that kind of give me a heads up as to where the appropriate entries and or where we have higher odds scalp opportunities, right? So for the majority of the day, there was not a lot to do here. I did repeatedly call out that the 21.26 was probably shortable first time in for a move back to the downside. The other thing that I pointed out coming into the day that I thought was very, very important was that in order for us to have any downside, and if we come back here, this is today's chart, and we look from the original break and the uptrend line that's intact here, basically coming from here to here, right? And if we look at that, we will see that all day long we never penetrated it. And I had a couple of there was a major point that I had with that. Hold on, I'll go to it here real quick. Let me grab the Epic pen. Okay, Epic pen in hand. So what I pointed out was the first thing that had to happen was that we get this trend line broken. Now, I'm not a trend line trader, as I said before, but and I pointed this out in last night's trade review as well. In order to have any downside, this has to be broken first, right? And that I would be cautious being overly aggressive on the short side until this got broken. This proved very, very effective through the course of the day. There were two trades that I pointed out to the people in the room as the day was progressing, and I actually posted this on the Stock Twits and Twitter feed, the public Twitter feed, through the course of the day. And what I said was that outside of the fact that we could not get below on ES, we could not get below this trend line, we kept finding responsive buyers back up, was that if NQ, which we have right here, and I said if NQ could get back above 45.08 specifically, if we could get above and close, and you see we made several attempts at doing it, 1, 2, 3, finally on the third one. As far as the trap goes, I have a trap count that I work off of. This was where we were targeting the first entry, right, with the stop would be slightly below this low. And I mentioned if we could close and hold above 45.08, we had a good chance of getting an upside move, and additionally that I thought ES would make a break to the upside. So sure enough, we finally trapped, and if you look about the same time, ES makes a strong move to the upside. Just about this time when this was coming out, I got one of my own internal indicators indicated that we had large volume sellers coming in above 21.30, and basically we entered a short there with a 2 point stop. And I can show you actually on the private Twitter feed, which is my at 2tradeandperform.com, and you can see right in here. Let's see. I mentioned a couple of things. Let's see. So you can see, as I mentioned, this was about 5 hours ago. I'm currently recording this at 5:41, so this was about 12:41 Central Time. I had pointed out that the NQ trap was taking forever, but it was creeping along nicely now. And then I said, again, about just close to 1 o'clock, right? That I'd scale a bit of NQ and ES if you took it long, nice move on the slow day, right? And then if you'll notice right afterwards, and that came again right here at 21:30, first time in. So that's putting us time wise. So all this kind of took place at the same time. And then you can see right here is when we hit that 21:30 exactly. So at 12:45 Central Time, and I tweeted out that I would. Where were we on this? Let me see. Let me go through the sequence. Okay. Scalp trade short 21:30, stop 2.5 points, right? So you can see we barely took any heat on this trade from where we entered, 2 ticks essentially, right? Then I put the time frame that I would expect us to be able to get our scale, 10 to 15 minutes. However, being that it's a slow day, it took a little bit more time than normal to get the rotation down. I did not expect us to go all the way to the other end of the range. I was actually quite surprised by that. And you can see I took my first scale at 21:29, and then I moved my stop to stopped on balance to 20:30.75, and then you can see I closed the entire position at 21:28.50. Now, if we were not in a market if we were not in a market where the rotations had been so small for so many days in a row, I would normally try to push that trade for 2 or 3 points. Again, I'm not looking for 5, 8, or 10 points. If I get it, that's great, but that is not what I'm generally looking for. You can see I closed the position well before we rolled to the downside. I should have left a trailer, but again, that moved us right into this uptrend, and I had nothing to indicate that that uptrend was going to break. Outside of, we did get a trap underneath Monday's high, but given the price action, really, I and obviously a bunch of other people were caught by surprise. I did take another short additionally at 21:26 to the downside. I did not call that out, nor did I post it in the room. It came rather late in the day. It was after 1:30 in the afternoon, and it was an aggressive entry. The key was one of the things I've been striving for. The nature of the market has changed a little bit, and we're not getting as many zone trades as we normally would. So I've been trying to supplement those zone trades with scalp trades. Now, normally those scalp trades I just keep for myself, and I in the past had not shared them with the room, but I do intend to increase the amount of sharing I'm doing on those scalp trades to try to help more and more traders add 1 or 2 profitable trades to their to their trading portfolio every day. So, at any rate, this worked out beautifully. Very low risk. Everyone had plenty of time to enter. It was able to give us our scalp within a reasonable amount of time, and a few people were able to actually catch a good portion of this roll to the downside. Really nice. We actually had almost a 10-point rotation down. I'd like to say that I rode the whole thing down for 10 points. I did not. I got a good, nice chunk of it from 21:26 on the backside test, but I did not ride this whole trade all the way down to the downside, and really was quite happy with the trade. Also, another thing to point out, we did expect, because there was no news, we covered in the AM session that we were expecting a balanced day. What are the characteristics of a balanced day? A balanced day will have new highs will get sold back into the middle, and new lows will get bought back up to the middle, right? So we really had no new lows through here. We're saying higher highs, but you can see we come out, we make a new high, market rotates down into the middle. We come out, we make a new high, market rotates back down to the middle. In this case, broke all the way, went all the way down. We came down to 21:21.50. Normally, I would say this zone was tested so much, but in this case, this was a very nice extension, almost 10 points. And then we get the counter rotation right back to 21:26. Again, I wasn't calling out these trades, and I did not take the long out of 21:21.50. At the end of the day, it was just getting too close to the end of the day to mess with. However, I got to say, in a slow, grindy market, that the guys in the room in general, we did a great job at identifying key areas to take trades. We did a great job of staying out of the way of the chop, and you either ended up flat or with a profitable day today. And that's, of course, the entire goal of trading with a trade plan and being patient, letting the market play itself out to the point where you're still you're not frustrated or exhausted by the time the opportunity is presented to you. The other thing I wanted to point out, I normally don't look at volume, but in this particular case I will. If you look at volume from on this break, okay, and this is how, not everyone will see it this way, but this is how I see it. I'm going to go over here to my market delta chart really quick. See if I can open this up. Okay, let's squeeze this up. But when you see an expansion of volume, where this is our volume in here coming to the high, and then you see this huge spike in volume right here, when you see a huge spike in volume like this, expect continuation. In my eyes, expect continuation to the downside. Now, this gets confusing to some people. We're in a balanced day, we get a large volume, we rotate down to the bottom of the range, but yet expect a break down to a new lower low. Okay, so let's cover that for a second. So if you'll look, sometimes I love market delta, sometimes I hate it. So let's lower this a little bit. And again, I usually don't talk very much about volume, but in this particular case, it does make sense. Let's see if I can bring this down to a level that'll help out. There we go. Okay, so you have a huge expansion in volume, and you have a break, and this is a big break, right? Look at the trend line. This is a trend line break, which I'll show you on another chart, and a huge expansion in volume. Generally speaking, this is where I would start to look for an AB equals CD. Not only that, but if you look, you've got to consider in this process, how do large traders operate. So this move on this volume did not come out of the blue. In my eyes, this was a relatively large, probably institutional seller that came out and decided to liquidate a long position, right? So one of the things that institutional traders don't want to do is sell on top of each other. So what they'll do is, you'll see that we got the move to the downside, and then 5, 10, 15, 20. He waited 20 minutes to see if anyone would come back up and pick this up back to the upside. After 20 minutes, he lost patience and he stepped back in for another move down. That move exhausted us to the downside. You can also see that the volume on that move down was on significantly less volume than on the original break. You also had an AB equals CD type move here, and that's where we finally finished off for the day, and then we kind of limped back towards the 21-25 area. I say that because when you see that huge volume spike, that should set alarms off in your head. And generally speaking, the pause that institutional traders will take is somewhere between 15 and 30 minutes before they'll step back in and put size on it. Why do they do that? To avoid selling selling on top of each other, right? In other words, they don't want to start a cascade. They lift off the gas for a little bit to see if anyone will come in. He wasn't done yet. He needed to step back in with another sell order. Once he was done, the market was able to lift. Okay, so let's look at a couple of other things here as we go through the course of the day. So again, for a slow day, we had some interesting things. So let's go through it again. We had a trap trade on NQ. The trap trade on NQ fueled ES back to the upside to the 2130. We got a sell indicator at 2130 that actually turned out to be the high of the day. I wish I had left the trailer. I did not leave a trailer. Again, that's part of being conditioned to the narrow ranges of the last couple of days. But it turned out to be a very, very nice, profitable day for patient traders, right? Let's take a quick look at the bigger picture and kind of get an idea of where we're at going forward. And the big question I would have at the end of the day is, has anything changed? Can I expect a big change coming into the day tomorrow? So first, let's look at NQ. And our first key on NQ here, let's remove this, is that our one timing has not stopped. One timing is basically when we're unable to trade below the prior day's low, and we almost did it here, but we did not do it. And we've basically been one timing in one direction for the better part now of 1, 2, 3, 4, say 1, 2, 3, 4, 5, 6 days, right? When one timing ends, it does not mean that the trend will reverse. A good example of that is here. See how we had 1, 2, 3, 4, 5 days where we were unable to trade above the prior day's high. We were one timing to the downside. However, you can see here, once we stopped one timing to the downside, the market did not reverse and go straight back up. The market changed and went into overall balance for a couple of days, right? So here we were in a downtrend, and after this day we switched to a balanced market. So just because we stop one timing, all we have to do is trade below prior day's low to stop one timing, and it does not mean that we will have a change in the uptrend. What it means is I'm looking for an indication that the nature or the way that the market is trading will change, right? Next, just like here, right? Downtrend, stop one timing, go into balance, right? Okay, if we look at okay, I don't know how much of that was cut off, so I'm going to instead of record this whole thing over, I'm just going to pick up where I left off. What I was covering was that really nothing has changed here. We were going through a one timing sequence. Hopefully this is where we cut off, and I am picking up at the appropriate place. So one timing simply means that on the day time frame that we are, I see what the problem is. You can't use Epic Pen and this. So got it. So what you will see is that as we were moving higher here, we failed to trade below the prior day's low, right? You can see we had a similar situation here. 1, 2, 3, 4, 5 days where we could not trade above prior day's low. You'll see here we stopped one timing on the 4th, right? Now, that does not mean that the market was unable to trade lower from that point forward. As a matter of fact, clearly it was. But it did indicate that there was a change in the nature of the market, and if you'll see over the next couple of days, we went into instead of having a downtrending market, we went to a sideways balanced market, right? And that makes a big difference. Just knowing to look for that change in the way that the market is behaving gives us a huge edge. Why? We know to look for, instead of pressing our trades to the downside, that all of a sudden, let's look for clues where we're trapping and making moves back to the upside. Instead of thinking that we're going to run straight up, let's look for exhaustion points on the upside and see if we trade back down into the middle. So here we are again. We have 1, 2, 3, 4, 5, 6 days where we have been grinding, and the range has been getting narrower and narrower. So generally I expect two things. First of all, I'm looking for the one timing to stop. It does not mean that we cannot have a very large down day and stop the one timing. If we were to have a day like this hit tomorrow, it would end the one timing, but we would also have a very wide range day to the downside, and I'm expecting an increase in volatility somewhere in the next couple of days. Since we're heading into the holiday, I'm not sure that we'll get it before next Tuesday, but I am looking for an increase in the range. We've gotten pretty compacted in terms of 5, 6, 7 point ranges intraday, and I would expect us to go back to 20-point ranges pretty soon. Also, importantly on this, what will be some of the clues that we are going to have a change in nature? Well, first of all, we'll trade below. If we open below or trade below today's low, that'll be the first heads up that things may be changing, right? Next, we'll look for open drive higher, open drive lower. If we gap down and drive lower, that would be a big sign that we're going to have a change in nature, and it is possible that we could trade all the way back down to the bottom on NQ. And the same thing holds true for ES. Let's look at ES really quick. If we look at ES, you'll see here there was the breakout point, right? You can see that we're one timing to the upside for 1, 2, 3. Actually, we stopped one timing here this yesterday, and then but we've resumed the uptrend. Maybe I didn't catch that yesterday. Very interesting. Now that we are not one timing, I guess I'm going to have to correct myself. I thought we were one timing, but we are not. We ended that one timing yesterday when we traded below. So perhaps we're going to go into more of a balanced range. The other thing that's important to note on this particular chart is that if we trade below this 2115 to 2113 area, would essentially create a trap really below 2119, but importantly, if it closes below 2113.78, 2115 level, it would trap us back into the old range and give us the possibility, certainly, of retesting 2080. And then if we get past 2080 areas below, um, right now I don't see us trading much below 2080. At least certainly not tomorrow. That would be a massive down day, right? It'd be hard to expect us to get much past this point. 2083 to 2079 would probably be the bottom end of the range for tomorrow at an extreme, right? So at any rate, that's kind of my view on the market right now. Clearly, buyers are in control. Hopefully, that helped a little bit. Within the room, I will be making greater and greater efforts to call out scalp trades whenever possible, simply to help add to the P&L outside of what we already get in the zones, right? I'm assuming buyers are in control, which means I expect responsive buyers from rotations lower moving forward. And then the last piece, and I say this to everybody since I post this publicly, make sure you're trading your trade plan, not my trade plan, right? Whatever you're doing, make sure that you actually have an edge in what you are executing, that you know that day in, day out, you can actually pull results out of what you were doing and it makes sense. Third, don't trade because you want to trade or because you're bored. Trade because this fits your trade setup and fits within your risk parameters, right? And then the last piece, a lot of people will go around, and I've said this for a long time, you'll jump from trader to trader trying to find who has the hot hand, quote unquote, in any particular market, right? Like right now, anyone who's saying, look, buy any 4 or 5 point dip, they're posting, hey, I'm making huge money because the market keeps rotating back up on very small rotations down. We're basically chopping sideways, right? Then all of a sudden the market will make a shift and you're following that same person, and all of a sudden the market will go to 10-point rotations and that guy starts taking stops and you're wondering, hey, what the hell's going on? When you're following someone, understand who you're following, what their philosophy is, and what the risk parameter is, and importantly, make sure that there's a teaching component to what they're offering within their service, and not simply a hey, this is the call, this is the trade, take it and move on, right? Trade services are a dime a dozen. Most trading services, has been my observation, do not, there's no one that actually on their trading desk that actually trades, right? They can make trading calls, they can draw charts. That's one skill set. Trading is a completely separate skill set, and it can drive you batty trying to follow one person to another. Find your own trading methodology, learn it well, execute it for yourself. Those are the guys who I've seen succeed time and time again. Anyways, my name is Simon. I dragged on longer than I wanted to tonight. I certainly hope you found this helpful. If you have any questions, you're welcome to email me at tradeandperform@gmail.com. If you would like to come into the room in the morning and see what it is that we're covering, and I generally stay live at Market Open for the first 1 to 2 hours every day. You're more than welcome to send and ask for a 1 week trial subscription. You can email me at tradeandperform@gmail.com. That's TRADEN, as in the letter N, perform, PERFORM, @gmail.com. I certainly hope this helped. I look forward to posting on a regular basis. Today was a nice surprise. The market opened up in the afternoon, and let's hope we get to tomorrow and we have a nice day tomorrow. Anyways, everyone have a great night. Trade well. Make sure you have a written trade plan. Make sure you know that you're following your risk guidelines, and we'll go from there. You'll have a great night.